Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about a lender, a major lender, and multiple other lenders that are slashing interest rates. And I mean seriously slashing interest rates, as much as 20% off the current rates, which is really, really positive news. So we're going to jump into that. We're going to talk about what that means. Should you take this deal or should you wait? Because other lenders are potentially looking at cutting rates this week as well. Now, as always, if you haven't done already or you're new to the channel, make sure you subscribe to the channel over there and hit that bell notification. We're nearly going to hit 20,000 subscribers. Not sure when that's going to happen, hopefully in January. If not, we'll hit it in early February, but you could get us there that little bit closer. And as always, we want to get more views on the channel. And the biggest way you can support the channel is by smashing that like button or tickling the like button. Do something to the like button, guys, because that really, really helps us with the YouTube algorithm. It gets more eyeballs on the content. So do that right now. So HSBC have decided to not only cut interest rates. I've used this term a few times and some of you have come in the comments and say, that's hardly slash. This is a big drop. And the reason for that is something called swap rates. So the swap rate in the market has dropped significantly over Christmas and over the last few days. And if you look at inflation figures, you'll see the new inflation data from the government on the 17th. I follow a website that I've found pretty accurate recently. It's called Trueflation, and they're saying that the current rate of inflation is 2.91%, and I think America's dropped to 2.12%. So that is going to be really, really, really positive news if that is accurate. Now, that could change, and inflation could go up. We've got volatility around the world, but right now it's looking pretty positive. So the lender I want to talk to you about today is a big lender, this HSBC, and they are really wanting to fight to get business at the moment. You see, transaction volume, according to HMRC, is down around 20% at the moment. That means that banks, solicitors, all of these types of businesses aren't making good money at the moment because they need the transactions and the fees to go through. And when you look for a deal, think about when you look for a deal, or when I look for a deal, my broker, he will go off and he'll look for the best deals in the market for me. And he won't bring me 10 deals, he'll bring me 2 or 3 deals that are on the cheaper end. Now, sometimes, as I've said before, we'll look at those deals and we'll say, look, it's not always the cheapest deal we go for. Sometimes maybe the second deal is a little better because maybe we can get out of that deal earlier if we're doing a refinance on a project or something like that. Or maybe the fees are less. There's various different things that we can look at. But when lenders want to get business, they have to be at the top of these search engines. They have to be one of the cheapest deals that the broker will see. And that works on Money Supermarket, Compare the Meerkat, or a broker. And so HSBC have taken their 5-year rate. This is a big drop. It was at 4.79%. And they cut it or slashed it from tomorrow to 3.94%. That's on a 5-year deal. That is a very tasty drop, and I'm sure you'll agree with that. Crazy that we're seeing this stuff now, and this is based off the back that a lot of the markets feel that interest rates from the Bank of England at least are going to drop, and so the swap rates, the money that the bank can actually borrow at the rate that they get, have dropped significantly because of that. And this is really, really, really positive stuff. So that is going to make a considerable difference to your monthly payment. You'll really, really notice that. So that's on the 5-year. What about the 2-year deal? So they're improving the 2-year deal. And on the 2-year deal, they're going from 4.93%. And it's not such a big drop here, but it's still a decent drop. It's going to 4.49%. And what we're hearing from brokers and reading the industry news is that a lot of people are going for 2-year deals at the moment. So while this is the headline rate here, the 3.94, a lot of people are going for these kind of deals at the moment because they have the belief that interest rates will come down in the next year or two, which is looking likely. So this is pretty positive news here. Now, deposit-wise, what do you need as a deposit? Well, you need to have 40% equity in your property. Now, some of you are going to comment and say this is no good for first-time buyers or new purchases. It's not. It's okay for a purchase as long as you've got more deposit in there. Whereas so that means if you were selling something you already have and you're moving that across, you might have a larger deposit. But most people do actually have a 40% equity in their property. You think parents, grandparents, you maybe have had your property for a long time. It's just not particularly great for new people. So there are deals coming out for those people that have smaller equity or smaller deposits, around 10% deposits and stuff like that. But that's where this sits. Now, this deal here, this 5-year 3.94, I wanted to see how does that compare to what other people are offering at similar deposit levels. And the average is 5.05%. Just to give you an idea of how competitive that is. That is an absolutely stonking rate so far. Give me a like so far if you've liked this video. Comment with your thoughts on this because I think this is really, really going to be a good one. Now, when we had rates at 0.1%, you weren't necessarily getting that rate. A lot of people, the average was around 3% anyway. So that means if people come onto this rate and 1.6 million people are remortgaging this year, 1.6 million, this is going to mean that it's not such a shock for them. If they can get that rate and they've got some equity in their property, great news for those people, because that means that their payments might only go up by a couple of £100, whereas this time last year, you were looking at 6.5%, 7%. Some mortgages were 8%. I saw on the news, people were talking about 10% interest rates. I didn't see any that high myself, but I did see the news talking about that at least. And so this is getting to a much more reasonable level. Now, brokers are talking about this, and they all feel that most lenders are going to drop rates in the next 2 weeks. That's based off the swap rate being low. The money, the rate that they get is around 3.5% at the moment. And it's also based off the fact that you can't sit back and let HSBC get all the business. So if you think about this, if you're Virgin Money or you're NatWest and you're at a 5, if you're in this area, 5%, and HSBC down the road is offering 3.94%, HSBC is going to get all the business. You're not going to get anything. Well, you might get a few loyal local customers, but this is really, really moving in the right direction. This is a great start to 2024 for sure. Where do you think rates are going to end up in the next few weeks? Let's have a comment below. Where do you think rates will end up? What do you think the best rate you will be able to see by the end of January? Do comment below with your thoughts on that. Do smash the like button if you didn't earlier. That helps us so much. Do go and check out some other content on my channel. Why don't you go and start with this video right here.